Welcome to TradeTheMBI.com. This is John. This report is for the 19th of November. And as we begin holiday trade, which would be, of course, Thanksgiving coming up later in the week, we're going to get all sorts of little shenanigans, can be interesting because you have very different liquidity issues as the round two tier players sort of get control of the steering wheel and can drive things in a lot of directions, trying to make a little hay for themselves. So you can see we're stuck right here at the bottom side of this. 2731 was this previous algorithmic activity, and you can see we've just pretty much traded both sides of it pretty consistently. We're now at the dip side coming back around, or we're just sort of flat at it. It is interesting though, we have rising gold, we are below 50% level and still within a sell signal. That orange did not continue its dip. In fact, currently it's flattening out. Of course, it's a little too early to tell where that will end for the day, but that would be significant because a failure of the orange to dip makes it much more unlikely that we're going to get the breakout from this little wave action that's going on. So that's worth paying attention to. Plus that level, 2731. And we have quite a few levels in between. Let me just put them up there. The ABM green at 2720, and then of course the biggie at 2684, which was the bounce one at the 23% daily Morganacci line. And for the NQ, much the same. No difference. In fact, even less of a dip in the orange, suggesting that we're not getting a strong relationship tie-in between the buyers and sellers. They're still dominating. Now, of course, BritXZ, everyone thinks that that's done deal, happening, beautiful, that effectively Britain is staying in the euro and there will be no change. And no change means you can buy the wonderful growth product of the European Union, which pretty much is non-existent, or their illiquid banks. So there you have it. The euro is saved for now. And of course, still, rising treasuries is bizarre given the fact that, well, of course, you have the other side of the coin that's saying that the economy instantly stopped last week and that the numbers are going to be horrible. And therefore, the Fed won't be raising rates because of the fall apart of the economy that happened overnight. And these are articles you read. It's kind of joking, but nonetheless, they're out there, and it does fuel this view that it's not possible for the economy to be moving forward, and therefore there's going to be some negative news that will cause the Fed not to raise rates because it's just been doing so for the fun of it. But really, in reality, that is, the Fed really does want to stop the economy. I mean, it's an interesting thing, but the policy doesn't lie, because the justification for raising rates in the past has always been about inflation, and we're not really seeing that, particularly when you look at this. This will have broad impacts going into well, the beginning part of next year, and that particularly as you see winter take fold, and it should be a nice, good winter. It's still very funny though, because you hear these people who are liquidated from oil trades and things like that because they just didn't know what to expect. They just didn't expect a decline, and we just pointed out that they're clearly, just as we pointed out with various other stocks, Apple and the rest of them, none of this was a surprise. The decline in Apple fit right into the positive extremes, so on and so forth. It's all the same. The pop-up gold, long overdue. I mean, it's been trailing there. This suggests that some people are going to be seeking commodities as we head into year-end, because without the gold, you had to transfer into something that had an oil trade. Logical move to move into metals again. And, yeah, there we go, busy chart. So let me just slide over and expand it a little bit. Started off the day. It's nice action again. Beautiful little swings back and forth. We had the original no orange, popped up, got to the 50%, couldn't do it, but the secondary one was a little bit better with that nice dip going through. Much higher values already for shorts. So it didn't give them the room to climb. All they had left was to cover, which they did, prompting the short snake that developed a little early back here, and then we didn't get the cross till bar later. Actually, you could even have gone right here with the positive extreme. Either one works, because at least at this point I was a little less excited because of the strong rise in the red, but open to the next bar, you could see that the decline had started immediately, so it was pretty easy to get it right up at the peak of that move. And we'll expand it one more time just to make it super clean. Love the power of doing that. And it was a beautiful decline. I mean, when you consider all the way from the mid-30s into the low 20s. It's very nice. Now, the orange came down here, did not break below. I wasn't too concerned about that. And in fact, it held up pretty decent, but then boom, all the way back down to the low. And then that's when it produced the turnaround buy in one bar, literally one bar. It was like a power move. And it was the flip over, and sure enough, it peaked out just like they all do most of the time. Opening of the mouth, green. It crossed below just before this bar. Actually took place right about there at the same time, but the next one confirmed it right below the ABM. And then if you really wanted to wait, you could have waited for the full DSC spread. Or like I do, just expect it for confirmation, and if it didn't come, then you would know pretty quick as well, but it gives you a nice range to be able to be safe when you're just above that EBM gold and below the 100%. Makes it easy from a control standpoint. We ended up with another buy that took place right here on a little bit more elevated. The secondary pivot showed up right there. Once red started going, and that's actually what caused it to take off before the final split. Now this one from the separation, it was a little early from a green cyan move, but what you had was the orange spike, steel fade at the same time. You had it crossing below the green on flat red. I tend to like those. It literally gave you plenty of other opportunities, because you can see several other times we move right back to the 76, and that'll happen with shorts. So you get that initial move, and you think, yeah, it's all going great, and then boom, it comes up back up above. But there was no change in that signal. Really wasn't doing anything, and then boom, it came down. And it didn't produce the orange at the initial crossover. That happened right here on the secondary one. So simply because no orange takes up a lot of space, you shouldn't confuse it with the full thing. That was just where the green had crossed right there. But you have to stay with it, because sometimes it'll happen 1 or 2 bars later. And then the other crossover, short snake right there. The two of them met actually, and rejected clearly at that point with the cyan rising. Green fading, you expect those two to end up meeting, and in this particular case, you know that you're at a Friday end of day, and then it just gapped lower for futures. So just to fill right back into that mid-range that was right here. Nothing too dramatic. This looks like it's building here to a new buy. Hasn't happened yet. Putting in a T3, additional pivots. So we'll have to see. I think that this is probably going to be a little soft. I know there were a lot of tensions in China and that, so some of those fears may still be existent, and it wouldn't be out of character with where we're at given the algo range from that daily. I think we're going to get caught in between these ranges for a little bit, and particularly if we break below the ABM, then definitely we're going to be revisiting that 23%. So just be watching some of those moves, and as long as there's no major catastrophe or data point, which really aren't expecting here going into the holiday light, things should be pretty benign, unlike some past holidays. So we'll continue to follow it though, and I'll keep putting up charts as they're relevant. So this action was pretty clean, so it's been nice and easy with the way the algos are giving us reading wise. As always, trade well. We'll talk to you later.